right, welcome back to the show. Our guest today is Brad MacBeth, and today we're going to be talking about how to boost your RRSP returns. Well, first I'll introduce Brad. He is a financial advisor. He's been so for the past decade, and he's brought the complete array of investments to his clients over the years. And in 2012, Brad started MacBeth Mortgage Investment Corporation to deliver consistent returns to investors. And obviously, the idea of RRSP investments, I mean, essentially there's a lot of people in Canada that have their money in RRSPs, and they're wondering, what am I doing with this money? Brad, maybe you can give our audience some insight on ways in which to boost that RRSP return.
Yeah, I'd be glad to, Kirsten. People have been conventionally investing in their RRSPs with usually in Canada mutual funds. Canadians love mutual funds, or perhaps individual stocks and bonds. But one of the best ways to improve the results in their RSP is to look for investment alternatives to add to or enhance the returns that they're getting inside their RSPs. For example, alternative investments can run the gamut from mortgage investment corporations, which is what we're doing, to limited partnerships and other types of investments.
Now, are all of these investments actually eligible for RSPs?
Well, that varies with each type of investment. In our particular case, we are eligible for RSPs, RESPs, tax-free savings account, which are a great vehicle for Canadians, relatively newly developed. And the nice thing is, for registered plans, these types of investments often return investment returns in the form of income. And the problem with income is, of course, it's taxed at a high rate. However, if it's inside your registered plan, your RSP or TFSA or RESP, the tax is sheltered and deferred until the time you take the income in retirement.
So, Brad, what about the risks associated with this type of investment versus the more traditional approaches?
Well, the first thing I'd say is any type of investing involves risk. And one of the problems over the last decade, well, really since the year 2000 with conventional mutual funds, for example, the stock markets have really only returned between in the 2% range over that period of time. So you're taking a risk not getting the kind of growth you need. However, when you're looking at other types of investments, each one is unique and you really have to investigate the specific risks to that specific investment. In our case, for a mortgage investment corporation, we provide steady returns, and our investments are secured by real property. So for example, last year we paid 7% to investors. This year we're going to pay 8.1%. Plus, we've actually added an upside component in the form of some equity participation in some real estate that's going on in our local area. So our investors are going to see kind of a dual leg of returns.
Now, Brad, when you're saying the return of 8% plus, is that return within the RSP, or is that return that comes in the form of dividends outside of the RSP, or how does that work?
No, those returns all come into the RSP. They can come in as additional shares. They can compound their returns that way, or they can take it as cash inside their RSP if they're looking at, they need some cash coming out of their RSP, or if they want to allocate it to some other investment as well.
Now, what about the tax-free savings account? Do all the rules and regulations apply, and all of the basically all of the shelters apply as well, or are there some caveats that don't apply here?
Well, the nice thing about a tax-free savings account is that you can take money out of your tax-free savings account, and there's no type of tax penalty on that. So you put your investment inside your tax-free savings account, it grows, and whatever you take out is not taxed further. As opposed to your RSP, when money comes out, it is taxed as income.
So interesting approaches to take a completely new sector of the market, this alternative investment sector, applying it to RSPs as well as the tax-free savings account and others. Brad, it's great having some insight from someone who's a financial advisor that can give us some help with looking at different ways in which to increase and boost our revenues in our RSPs. Thanks very much for joining us.
Thanks very much, Kirsten. It's good to be with you.
We've been speaking with Brad MacBeth, and you can follow the links here after the show to get more information about his products on his website. Thank you, everyone, for watching. Stay tuned again real soon. Bye for now.